Welcome to Hello Future Buzz, everybody. We're going to talk fintech with John Wingate. I wanted to let the community know that you're with BankSocial, and it's new to our community. And I wondered if you wanted to explain a little bit about what your vision for social capitalism includes with BankSocial, John.
Yeah, absolutely. We've launched a protocol and a DAO that essentially has the capacity and the legal capacity to lend on asset-backed loans. And so we have several loans in the pipeline. We just got our full DAO status a few months ago. The idea around the whole concept of social capitalism is that with decentralized distributed ledgers, we are able to cut out more middlemen and allow members of communities to build communities that are financially backed and then participate in the benefit of those ecosystems. And I think what we'll see, we've certainly been talking to a lot of, there's the whole financial side of things with banks, credit unions, and then there's the whole corporate side of things. We're working on some very cool technology with wearables and allowing the corporate bodies to directly engage with their consumers and the most active consumer base through all these different technologies that are coming together. And so that's the overall idea and concept behind what we're doing at BankSocial.
I had a chance to check out the website. It looks like you're doing some really cool things. I did notice that you have a token already, BSL token. I'm wondering what network that's minted on, and if that's like the DAO governance token or a utility token, or kind of what you've built from a DLT standpoint and tokenization standpoint so far.
Yeah, absolutely. So yes, the token is on Ethereum and Binance Smart Chain. The token is a governance and it's a utility token. So we have a full governance ecosystem where our community, our DAO, is able to propose, discuss, temperature check, and then take to an on-chain vote, all in an autonomous fashion without the engagement of anybody from an admin perspective or from a centralized authority perspective. And then we also have the staking utility portion of the token, where in the decentralized staking component allows the community to stake into the pool that funds the loan that then gets repaid on these assets that people take loans out against. And so there's a passive, rather active income earning capacity, as well as the governance component of the token.
When you say it's BankSocial is a DAO, what structure or governance of the DAO? Do the members get to vote on things?
Yes, so we actually are a Wyoming DAO, a legal LLC, DAO LLC in Wyoming. And if nobody's familiar with that, I think you should, especially in this in the Hedera community, I think there's even more reasoning behind why you would look to formulate one of these things. Essentially, in Wyoming, the DAO LLC provides legal protections to a DAO in the form of an LLC. And so that becomes important when you have, just liability of the DAO participants. And so long as the DAO is not participating in fraud knowingly, then, you would come under all similar types of protections that an LLC would. And so, yes, the token, through our gov.banksocial.io site, has full capacity to initiate proposals, take proposals through a discussion phase, take proposals through a temperature check phase where the community members can not only vote, but help formulate the proposal into something more driven by consensus. And then once that proposal has gone through a temperature check where it gets a minimum vote off-chain, it then gets transferred on-chain, where both chain token holders have the ability to connect their wallets, identify themselves as BankSocial token holders. We create a quorum on-chain, and those votes happen. And again, those votes happen without anybody from the original core who wrote any of that having to handhold anything. That all happens with the community's self-participation and autonomy, which is really cool.
Yeah, that really is the future. So you're doing that with smart contracts then?
It's partly smart contract. So, it's really right now you've got an amalgamation of Web 2 and Web 3 technologies. I would like to think that as more developers and the sophistication of Web 3 technologies in advances and evolves, that more of this would be handled specifically on chain. Going to be some component of certainly HTTP interface or minimum TCP/IP interfacing that has to happen just so you can get across networks. And so, the best facilitation of that right now is through your traditional web technology. Certainly, though, I could see that evolving into something. For example, you had Internet Computer came out, which has kind of died off, so I don't know if a lot of you know about it. But conceptually, the idea was that you had the ability to run a network within a network and to run essentially virtualized computers within a decentralized network. And I think that one day it will get there. And when it does get there, you'll be able to deploy not just smart contracts, but entire applications to distributed decentralized networks. And so you'll see the evolution of essentially services. So think about a mix-up of IPFS and cloud, where you have decentralized virtualization of cloud services. I could certainly see something like that coming to fruition. Then once you get to that point, then I really think you're in a sufficiently decentralized ecosystem. I'm not aware of anything like that. If anybody knows something like that that's being built or is built, I'd certainly love to talk and learn more about it. I think that's really the next evolution. And so until we get to that, we're certainly seeing just the Web 2 front ends that have the Web 3 components built in. And we'll continue to see evolving in that space probably over the next 24 to 48 months.
Yeah, I was just going to ask if the DAO that you have is currently public, or if it's closed membership or by invite only, or if it's kind of partner banks and other financial groups that you work with. And then also you mentioned that a lot of the communication in the DAO is off-chain. And just wondering what sort of off-chain channels you're using, if you're all communicating in a Discord or if you have another communication.
Yeah, certainly. So to answer your first question, it is a public DAO. You do have to be a token holder to participate in the on-chain governance, the final quorum voting, of course. It is a public DAO, though. There's no restrictions to getting into the DAO other than just buying the governance token or acquiring the governance token. Certainly friends could give it to you. And that's the requirement there. There's no specific membership with regard to FIs or anything like that, traditional FIs, credit unions. And then your second question, maybe just remind me what your second question was again?
Yeah, sorry. Sorry to throw two of them at you at the same time.
I remember.
Yeah, the channels for communication. Yep.
Yeah, so we have several channels for communication. We do have a Discord. It's rather light. We find that Discord is typically something that better supports a significantly larger community. Ours is, I think we have around 15,000 holders, and then active members in our Telegram chat, which is where the majority of our, just public discourse happens, is on Telegram. And then we do have a couple different servers set up for the off-chain, and they're virtualized and they're redundant. And those are set up for what I would consider the actual proposal and discussion. Certainly in the Telegram chat, there are discussions and formulations of proposals that happen there and get discussed back and forth with the community. The formalization of those happens on our gov.banksocial.io site, which is essentially a forum for discussion, and it has the quorum-based rules in there that have been programmed into it that essentially mandate adherence to certain thresholds, things of that nature. And then as that gets formulated, as a discussion gets formulated there, it gets moved to our on-chain vote, which is vote.banksocial.io. And then that, again, would be something that could be verified the wallet holders that participated, their share of BankSocial, their voice in the DAO, and then the final outcome of the proposal.
Really cool. And how much participation do you have? I think you mentioned you have 15,000 holders. Like when you take votes, I'm curious just how much engagement and participation there is in the governance.
It's been, I think that's always something. We looked around at a lot of different, governance ecosystems as we were putting this together. And, we have I think our participation, we get 4 to 6% on most votes. Actually, no, it's more than that. I'm sorry. I don't know off the top of my head. Frankly, it just kind of runs itself. And so the community proposes, I go in and vote when I feel like there's something to be voted on. I can't remember the quorum that we need. Maybe one of the community members can tell me what the quorum is that we need. Certainly, though, there is a quorum. I want to say maybe it's 10%. So 12, 15% active participation in votes that is required. And typically, I don't think we've had any proposals because our community is so active, and we have a very intelligent community. That's not a diss to other communities. They have done a great job of maintaining valuable discussion within the group and getting proposals to the DAO to be voted on with minimal. And I would say, I don't know how many people that equates to, several hundred people. Typically I would say would be part of a quorum that gets voted on.
Okay, awesome. Thanks for sharing that. Yeah, and I think from what I've read that's always one of the challenges in keeping the community engaged. If you're going to turn that governance over to the community, you have to have them participating in the governance. So it sounds like you have a really engaged and intelligent group. Very cool.
That's been probably the thing that's been the coolest about the project and the business has been that the community has been so engaged and so supportive of the building, the conceptualization, and then eventual running of the project, that it's been great. It's probably the greatest thing about the project.
I was just curious what the transport mechanism, like when a user votes, how does the vote go from person to person or computer to computer?
So if you're familiar, it doesn't really go from computer to computer per se. So everybody has the ability, without any type of reliance on another party to go in and vote. So there's no ordering or sequencing. You get in, you connect your wallet, and then you do you prove you're the wallet owner by connecting. And then, of course, your total allocation, how much you have in your wallet, is tabulated against the total allocation of tokens, total outstanding tokens, and then, of course, yours relative to the vote.
Okay, so it's a function based on the number of votes, and tokens. That makes sense.
Exactly. Yep, exactly. And we did that, primarily because we want to ensure that nobody's tied to anybody else for any voting. It's kind of like come and vote as you please, if you please.
Yeah, that makes sense. I was just wondering if there's like ever a need to have like a time fixed voting, or if it comes down to the wire at the last minute kind of thing. So I don't think there's a need to yet.
Well, all votes are timed. So we put in. So it's kind of a two-pronged approach to getting the minimum quorum. So you have a minimum quorum and a minimum time, and those are the rules that I said that were laid out prior to launching the DAO, and then those were built in, and those are things that can be changed by the DAO members at any given time, but it does require another quorum. So essentially what you do is to kind of alleviate as many of the risks as possible of things just falling through the cracks without enough time, is you don't just want anything that, say like minimum 5 days is your timing. You don't just want to put a timing constraint on it. Certainly if you did that, somebody could just vote, put a timing constraint on it, and then it just passes because they were the only ones who got in there to vote before the timer expired. that's why we have the quorum component along with the timer component, so that you have to have that minimum quorum to say, okay, enough people have voted from the community that feel this is a valid proposal, and enough people have had enough time to vote on this proposal before if a quorum is established, the proposal passes.
Gotcha. Okay. All right, that makes sense. Are you are you using mostly the JS SDK or Java or?
So now we're talking specifically about Hedera, correct?
Sure. Yeah.
Okay, so specific with regard to Hedera, I want to be clear about so we have some development on testnet. What we're looking at utilizing right now is the JS framework, certainly with Node and with React and with a lot of the other, most notably used Web 2 technologies in the Web 3 space. We feel like JS fits the most. I've looked at it with Greg. So Greg and I have had a call at this point where he's been great. I don't think he's on this call, is he? He didn't get to make it.
He might come at the half an hour.
Okay,
Yeah.
great. So Greg, Greg and I have had a call and a couple emails back and forth. Very knowledgeable. He's great. And, I think we both pegged down that the robustness and availability, both of the SDK's robustness and then the availability of developers and programmers. So, always got to take into consideration multiple facets when building out a technology stack. And really, I think that's one of the reasons why some of these other chains haven't gotten off the ground as fast as they possibly could. Everybody came out the gate and learned Solidity. And the reason why they were able to learn it so fast is because it was so close to JavaScript. It's certainly, with the exception of typing, its syntax is, very close to JavaScript. And so you have other people who came along after it, and they start using all different types of languages. And what ended up happening is most of them created EVM ports for Solidity. And so when you look at kind of building out a stack that's going to be a DApp framework, you have to look at what will garner adoption. And you have to look at it from two perspectives. One, how many developers are there in the market to support just, if you start from ground zero? And then two, how easy is it for the technology to be learned in the event that there aren't enough developers initially out the gate? You really have to look at both of those. And when you look at JavaScript, I think that's why you see the proliferation of Web3 technology so quickly, is because most of the SDKs, when you look at Web3.js, that's what it is. There isn't a Web3 Java. And the reason for that is because the people who built these ecosystems out understood that if they wanted mass adoption, it's best to go after JavaScript developers versus Java developers, namely. Just as a comparison, I'm not calling Java to the table by any means. Certainly, though, that is a comparison that I think most of us in here would agree with. And so when we looked at it, we said that, aside from everything else we looked at that's specific to Hedera, we looked at the SDK and said that we thought the JavaScript SDK was the most robust, had all the features and tools we needed. And then in addition to that, had the widest base of support for any DApp development that we would subsequently be, looking for people to build on top of the ecosystem.
Yeah. Okay, cool.
Now the great thing about, just add to that, the great thing about Hedera that I really love is that you're not married to JavaScript. So in the event that somebody wants to come and build alongside or on top of, or utilize a component of whatever ecosystem we have on Hedera, they can use Java, they can use Python, and they're well built, well maintained, to the point to where you can really look at them at a level of commercialization that I don't think, to my knowledge, any other distributed ledger has out the
No, they don't.
They don't. And so, when you start looking at, so let's get back into some of the other features of Hedera that we really loved and liked. And so the unique thing about what we've done at BankSocial relative to a lot of these other projects is that we've focused on regulatory compliance out the gate. So whether that's with regard to, the mechanisms for lending and any licensing required, or, we're very, very close. I don't know if any of you have ever tried to launch a crypto exchange, but they're not easy to launch. We're very, very close on that. And, so everything that we have to do, including the lending, there are certain laws that you have to follow. And so we've leaned heavily towards the regulatory side. We still believe in decentralization, self-sovereignty. Certainly, we also believe that there's a way to marry those two and to give the government, in the event of a unscrupulous dealer in the midst, give the government the ability, or give authorities the ability to go sniff that person out. I would think that the majority of us in here want to abide by rules. We just don't want to have to give up all of our information to prove that we're not bad guys. And I think that's the balance we're trying to have. And so when we looked at Hedera, we looked at, I don't know if you guys are familiar with the concept of self-sovereign identity, SSID. And so this concept, I'll just briefly touch on that. The concept of self-sovereign identity. And if you look at, there's a company called Global ID specifically that is probably the best case. Okay, so with sovereign identity, Global ID, you have the ability to prove who you are and what the third party is asking for without having to give everything. And so here's a case, like a point in case would be when you go buy liquor at the liquor store, and you have to talk through showing them your ID, and then they see all your address, your name, your height. They don't need to know all that. All they really need to know, they don't even need to know your birth date. All they really need to know is this guy over 21? Should he be able to buy alcohol? And is this ID his? And so when you start thinking about self-sovereign identity solves for that by, tying your device to you biometrically through eye, through face, through thumb, through whatever that is, tying that back to a credential that can then be exposed in a way that you approve to just give that person the ability to confirm what they need to confirm. And so in that same scenario, you'd walk into a liquor store and you'd put your device up against their device, and that device would ask, is this person over 18? And then it would say, yes, I have the Global ID credential, and because I'm a trusted intermediary, you can now trust that the credential that I'm proving to you is valid and this person is over 18. You don't need to know any other information. And so we started looking at how we implement decentralized. The cool thing about Global ID that I really like is that it's also decentralized from the perspective of you hold all your credentialed information, and you can identify trusted, just like your mom. So all of your moms, or most of your moms, probably kept a copy of your social security card and your birth certificate and some very important information under the bed or in some, security deposit box for a long period of time. And so you get the same concept here, where you can share your credential vault with your trusted friends and family, or remove that, or give them just a piece of it or a component of it. And then if you ever lose it, you can reconstitute it. So it's still in the early stages, certainly. It is something that is very exciting, because when you start to think about how, for example, lending that we're doing, we need to know who the person is. We need to know that the person is going to pay it back. We certainly don't want to maintain with PCI and some of the industry compliance standards that are required for putting these types of ecosystems together. Sometimes they're overburdensome, and the only reason why they're so burdensome is because you are holding on to that data. There's no other way for you to do this unless you hold on to that data. If you're just tokenizing everything, however, and you can now distribute the knowledge proof via tokenization, and credit cards have done this, which has reduced the reliance on it. Certainly, though, it has much wider use case potential. You can now provide for this type of ecosystem in a much broader sense. And so when we looked at Hedera, the few key things that stood out to me, I think, Greg, as I was talking through with him these concepts and really going deep into how they worked, there were a few aha moments for me. And one of those aha moments was in the, your Hedera wallet can't be air dust or can't be airdropped, right? Can't get a dusting attack on a Hedera wallet because your wallet has to approve the use of the token that you're about to receive into it. And that's a tremendous advantage for many reasons, because it certainly provides the issuer of whatever token the ability to validate and verify wallets and ensure that a wallet goes through a verification portal before, and so you can start to tie KYC and AML, and then the whole Hedera token service ability to freeze and reclaim. You start to open up a lot of things. In our base contract, we're one of the, as far as I know, one of the first to create a mechanism for retrieval of hacked tokens. There may be others that have done this, but certainly we're probably one of the first that I've seen on Twitter that have actually retrieved tokens that have been provably hacked, and people have filed police reports in the case. And so when I saw Hedera, I saw the intermingling of these really great ideas that we could, and I can't actually go into the product that we're building, so I'm going to have to stop here pretty soon on the Hedera component of things. We can certainly talk about Hedera and some other reasons of why we're using it. The idea, though, is that we need a stable peg of value when we lend. You guys all know what happened to Terra. That was just a nightmare that I called 6 months ago.
Yes.
And so I won't go into that. Certainly there's a need for verifiable, trusted, stable pegs. And so while I can't go into it much more than that, I will say that it's our intention to bring this type of liquidity provision, stability that's bridgeable with a base in Hedera, so that we can check all the boxes for government entities to be able to provably demonstrate our compliance to, BSA, AML, OFAC, KYB, and to create the most trusted ecosystem in stable value that I think's been created to this point. And so I'll stop there. I'm sure that piqued a lot of ears, and maybe you guys have a lot more questions after that. So if there's any more questions, please go ahead. I know I've just kind of been talking.
That's okay. Well, I know that security is on the top of our mind. So that's one thing that Hedera does bring to the table for any kind of development. And you have swaps going on, and you've got a wallet. And do you when you first get your tokens, your BSL tokens, is there a KYC that your members go through, or how do you handle that?
So the way we handle that is we don't need KYC for the governance portion of the token. We do need KYC for the staking and payout portion of the token. And so that's why we've decided, to bring, this is one use case. This is not the use case. This is one use case. That's why we've decided to bring Hedera into the picture. And so the ability for us to provide staking rewards through Hedera upon repayment of an asset through Hedera, and to be able to KYC a specific wallet with an AML provision on the front end that's then tied to an unlocking of the KYC and a subsequent approval of that wallet now being able to interact with the ecosystem was not just something that was conceptually a great idea. It's also something that helps us bring product to market faster. So instead of having to build out this entire ecosystem of components, it's already available in HTS, the Hedera token service. So, you really get a lot, and then you combine that and you pair that with the JavaScript SDK, and you have a really powerful framework to start from. And to touch on security, aside from just all of that, I think I'm a big proponent of open source, and I'm also, to some degree, an opponent of how some of these DAOs have been publishing source code and then opening themselves up to manipulation just because their bounty wasn't big enough. Or I think that's certainly happened with Compound. It's happened in a few other cases as well. And so I think here you get the best of both worlds, where you have open source that people can continuously help improve upon. You also have a centralized set of people that are dedicated to writing the best code that they possibly can. And typically open source, a truly open source ecosystem doesn't have that same incentive to do right by the community. It's kind of just, it's kind of the Bitcoin methodology of open source, where you just kind of hope that the developers sitting at the top with the keys are going to do the right thing every time. And there have been cases where they unknowingly did not. Don't tell that to people in Bitcoin. They will die thinking that cannot possibly happen. So, security wise, what I really love about this is there's the whole trusted validator network. And so when you start thinking of, certainly proof of work isn't as susceptible to manipulation. We could arguably, I think, make a point against that as well. But I would agree that proof of work is less susceptible. So when you start looking at more proof of stake type of scenarios, which Hashgraph is more closely aligned with a proof of stake type of validator network, you see that those proof of stake networks are more susceptible, at least in theory. I think you can make the argument both sides there. And what you're really left with is, well, which side do you want to be on? And then Hashgraph sits in the center, Hedera specifically sits in the center and says, well, we're providing a decentralized network that's backed by public and trusted validators, that's growing, and they're incentivized to be validators. And then you look at the ecosystem of distributed ledger technology, and that doesn't really exist anywhere. The only ecosystem that I would say maybe comes kind of close to that is, Binance and Solana. I would say that there's significantly less, insight or visibility into who the validation network or the confirmation network is on Binance and Solana. And that's why when you look at, so just in that portion alone, you have significantly more security in the validator network in Hedera than you do anywhere else when you look at any other ecosystem out there. And you start to put all these pieces together and you start to look at them, and it's really the only distributed ledger technology that lends itself well towards building enterprise level, scalable, long-lived solutions.
Well, I know that BankSocial has been going on for about a year now. And I wonder, because of the progress that you've been doing, and you have things like you're minting mortgages and doing hard money loans. When did you start investigating Hedera? How long ago was this?
So it's only been, I've known about Hedera for many years. Okay. A lot of people just use the term blockchain, and I always use Hedera as an argument against, hey, they're not all blockchains. Like literally, blockchain is a specific type of technology. It's not just a word used to describe, you don't just say car and describe a whole bunch of shit. Blockchain is a specific technology. What you're trying to say is distributed ledger. So I've known about Hashgraph for, many, many years, 5-6 years at this point. And specifically, when I looked at the specific use case for why we would use Hedera over any other distributed ledger, was after, it's been about 3 months, and it was after we had some meetings with some credit unions, and we came out with a need that we had, not only credit union buy-in for, but also government buy-in for, and we needed a secure solution that inherently gave us the ability to launch a product that could be, I don't want to use the word or the term sold, because the thought isn't that we're like going out and selling it, more so than it is, when you go in and sell somebody on the idea of something, the credit unions, governments, they are fairly conservative, and they want to know that whatever they're initially jumping into is inherently more secure than anything else out there. I mean, certainly it's safe to say that Oracle, Windows has launched with bugs, right? Massive security holes that credit unions, put that into their ecosystem, and they're now vulnerable as well. So, nobody's trying to eliminate risk. They're just trying to reduce it significantly. And when we looked out there at the ecosystem, after having those meetings a few months ago, Hedera very quickly rose to the top and stayed at the top. As we continued to check boxes off of what we needed and what Hedera had, it continued to stay at the top, really, leaps and bounds ahead of any other distributed ledger that we're aware of, or that has, there's also the side of, well, there may be some emerging technology that purports to be, significantly better. I'd prefer, with the whole way distributed ledgers can be overtaken and attacked, I'd prefer to be into something that has a much better distribution on the validator network, has support on the mirror node network, and support on the visibility into the chain itself, or into the confirmations, the transaction confirmations itself. And it really was the only solution out on the market that had all of that.
That's very good to hear, because we've been knowing this in the Hedera community for a while. So it's nice to know that you've been watching the Hedera progress for many years, and to know that when you needed something super secure and being able to be regulated, the regulators would like, and banks would like, that you came back and took a look on Hedera. So that's really great to hear, John.
Yeah, can I piggyback on that and just ask, were some of them already familiar with Hedera, or did you find yourself needing to explain?
No, so let me get specific. So there was already a running initiative in one of the groups that we were talking to. And when we were, when I was polling the different, they just hadn't made any progress, was the bigger thing. And so when I was polling those other groups, I found that, they had all, they played around on several different blockchains. And I already knew that for the specific use case we were looking for, Ethereum wasn't going to cut the cake. Binance, because of just where it is regulatory wise, wasn't going to cut the cake. And so I already knew that we had to have something different. I wasn't a fan of Solana because they've paused and gone down so many times, and certainly they'll get better and they'll continue to evolve. We don't want to be the guinea pigs on anything like that. And governments don't want to be the guinea pigs. And there were really just a few outliers that people were bringing up. And since I'd heard Hedera before, and I knew about it in Hashgraph, I, gravitated more towards those discussions. Certainly the other blockchains that were being brought up, I had never, one was called Corda. I don't know if you guys have ever heard of that one. And so I wanted to go with something that had a brand, had a name, was recognizable, had backer. Okay.
Yes.
So, it checks off the 20 or 30 boxes, certainly, that you want to have when you're looking at a solution that just needs that type of, buy-in ability, if I can put a word to it.
Absolutely. Definitely. And it's funny that when people come to Hedera, that other big players have been talking about it. So there is people are starting to understand the difference, I think, between distributed ledger technology that Hedera brings to the table and the word blockchain. And it's an educational experience, really. I think part of the thing that we're all pioneers in this uh, space is that education and the education of business owners, business thought leaders, and global thinkers it's really about just taking the time to explain things a little bit to them and get them on board with new ways of looking at technology. Part of the thing I wonder, when you were talking with bankers, like credit unions you mentioned, is there any fear from them about blockchain, or is it, they're going to be utilizing a new technology, and is there any skepticism, or maybe they're holding back because they don't want to join the future?
So let me I'm going to answer that question two ways. First, with a directly answer that question, and then I'm going to answer it with a perspective that we should all have after leaving this call. And so first, I'm going to say yes to your question. There's a lot of skepticism. Okay. And so we've approached this two ways. The first way is we're going to, the credit unions that we're talking to, they want to be a part of this. They understand this is the future and they want to be a part of it. And so those are, our early adopters, our evangelists. If you're familiar with the chasm of business, the graph of the chasm of business, the line chart where you have your early adopters, your evangelists, and then you have this big chasm where you're trying to find clients to bridge the gap to viability. And so when we looked at it, and now I'll get to the second part of what I think we should all focus on with regard to how we leave this discussion with perspective of, building, is that we shouldn't lead with the idea that this is blockchain technology. We should lead with the idea that this is a different solution that's going to bring faster transactions, lower costs, more peer-to-peer transactional settlement capability, reducing reliance on centralized third parties. Okay. And when you paint that picture and you don't say anything about blockchain, and then you pair that with a solution that obfuscates the reliance on blockchain or the addition of blockchain into the solution, then really all you're doing is you're building, Google Drive. So when people go on Google Drive, I'm sure if we told them that, it's running on this certain type of server and doing, it's got this type of database for its ledgering in the back end, anytime something came up, people would be like, you know what? I don't know that I want to be on Google just because there's so much inherent risk. And are they maintaining it? Is my, info secure? And maybe I'll just put my baby pictures on there and nothing else. However, Google goes about it by saying, yeah, don't worry about all that. This is the safest. You trust Google. This is the safest place for you to put your information and your documents. And they obfuscate what's happening behind the scenes. And I think I've had this discussion a few times, for blockchain technology to really take off and be, considered an integral part and a necessary part of all these ecosystems going forward, we have to build them in a way that, obfuscates away the necessity of blockchain. They don't need to know that blockchain is a necessary part, that they're interacting with blockchain and they have to be interacting with blockchain. They just need to know that, this is a different way of doing business. Just like what I tell a lot of these people, and there was I don't want to directly claim responsibility for it. There was a piece of guidance that came out from the National Credit Union Association where I told them, I had a closed door meeting with them a month or so ago, and I was very explicit in that meeting, and I was really the only blockchain distributed ledger person in there. And I was explicit with them in saying that make sure that no other, guidance you come out with expressly uses the term blockchain, because that's not, blockchain is a type of distributed ledger. Distributed ledger is really the the key technology difference here. I equate Bitcoin to Microsoft, and some of these other ledgers are just different. Oracle, and they're just different, newer versions of these types of technologies, and they're based in they're conceptually they're different, and the way they can be implemented are completely different. They're a paradigm shift in thinking. And so we have to obfuscate away that paradigm shift, because I find that if we have to go in and we have to sell everybody on blockchain or distributed ledger technology, that's going to be a very, very high uphill battle. And I think that the advantage we have right now is so many people have created reliance on APIs, external organizations, things that aren't directly tied in or owned by them, that we have a real advantage right now to build products with these features that people really inherently want and need, utilizing the distributed ledger technology on the back end as the mechanism and the means to get there. So I don't know if that answers your question.
Absolutely. Absolutely. It's almost like when I'm talking with charities about NFTs, I don't say NFTs, I say digital art.
It's exactly
I don't say cryptocurrency, I say it's just digital money.
Exactly.
Words matter, and people get it gives them much more comfort when you don't use certain words.
Exactly. And you're not even lying when you say this, because at the end of the day, when I say it's ledgering, so it's just like your Oracle database. It's just a new type of ledgering of Oracle database. You certainly wouldn't stop using Google just because they're using a different type of hash lookup that makes things faster, would you? No. And the reason why is because Google didn't go out and purport to have this crazy new technology that was still undergoing testing and the limits of what it could do. They just put a better product out. Don't worry about what's behind the scenes. Here's a better product.
Exactly. Yeah. Well, with the bankless, with the border free and reaching communities of different underserved communities around the world, I wonder if, Wayne, you have anything to say to John about that.
Hey, thanks. You're right on time. Welcome, and thanks for having me as well. Love the passion you bring with the project. Yes, that was actually going to be right into that perfect time. I was going to say, in regards to underserviced, disadvantaged communities, minorities, things of that nature, within the financial sector, there's a huge misrepresentation, things of that nature. Do you have any strategies, or is that kind of, been on the table with your team saying, hey, you know what can we do to, push certain product in certain underserviced communities with minorities, things of that nature? I mean, the crypto sector is very poorly represented, things of that nature. And of course, that's something that, certain communities, what I love about the Hedera community, moving towards, level of diversity with women and minorities, things of that nature. So how do you guys have any thoughts on that, if that makes sense at all?
Quite frankly, it broke up for me a few times. Would you mind kind of boiling that down and maybe restating that? My apologies.
No, I could hear it. The audio on this space is not the greatest for some people, but what Wayne was asking about is underserved communities have been underserved from the financial business that currently exist. And does BankSocial have any strategies to help underserved communities?
Yeah, so our lending protocol is available worldwide to anybody. The great thing about it is that it really works aside from banks. And so our DAO actually just approved a personal lending product that would allow really anybody around the world to apply and get a loan for themselves. So yes, absolutely. And I think that's a broader, certainly at BankSocial, we're focused on unbanked and underbanked communities. And with the reason why we came on to, or we're looking at Hedera, is to provide that flexibility for, American institutions and really institutions around the world that have the ability to provide liquidity, to be able to provide that liquidity. And the interesting thing about credit unions specifically is that credit unions are analog DeFi. Credit unions, and this is around the world. So let me tell you a story about how credit unions work in Africa, specifically in Nigeria. Okay. So credit unions in Nigeria, when you go get a loan, the loan has to be approved, not by the credit union, by your fellow members. They're the ones who pledge their money to your loan. Now, the credit union, of course, fractionalizes it and does everything they need. It is, however, decentralized finance. And even if you look here in America, the concept of the credit union is that the credit union employs the least cost and overhead it can, so that it can provide the most benefit and lowest costs to the members. And the members are really the owners of the credit union. And so we looked at their ethos and the ethos of the decentralized Web3 economy, and we saw a fantastic fit there. And so the idea was, well, how now can we take all this liquidity that's tied up, that these, believe it or not, credit unions are under leveraged. And so the idea that they have excess liquidity to lend out, it's just not easy for them to do it in a manner that would be something that could traditionally go into an underserved or an unbanked community, is a real, actual problem that needs to be solved. And that's why we looked at Hedera, or the solution that we're working on is rooted in that concept. Certainly BankSocial is rooted in that concept and has already done, things to accommodate for the unbanked and the underbanked. And our goal is to just continue to proliferate those concepts and those ideas in ways that are more scalable. So, connecting with credit unions, the amount of liquidity in credit unions around the world is tremendous. And so how do we open that up for people, make it easier to access it? And that's the credit union's ethos. And the other great thing about credit unions is they're not like banks. I was sitting with MasterCard, the head of their open banking division of Finicity, and they were trying to sell me on the concept of open banking, and that Chase and Wells Fargo were going to somehow come to the same decision at the same time, that they were willing to, be open with each other. And I said, okay, so you're telling me that you're going to get Chase on one side, Wells on the other side, and they're both going to agree to catch a falling knife with regard to how much they're going to be able to take out of people's hands with every transaction. And he said, yeah, that's our problem. I said, I know that's your problem, and that's never going to go away. They're for-profit companies. They have no incentive to do what you just said, other than we come in, we start to really change the landscape, and as a last-ditch effort, they close every single one of their locations because you don't need them anymore. And so, that's one of our main focuses.
Let's get a couple questions in. Charles?
Hey, thanks, Elizabeth. Yeah, you had mentioned that the governance side of your token is non-KYC, and that the staking and rewards is KYC. Is there a geo restriction on that? Can U.S. investors do that?
So there, when you say investors, what specifically do you mean? Because
retail, just average guy trying to buy the coin.
Anybody can buy the token on the decentralized exchanges or wherever the token is listed. We're listed in a few American exchanges as well. So you can buy the token however you want. Our raise, we didn't actually raise any money from the token sales, and so all the tokens were put out there and distributed, and the liquidity pools continue to function for the purpose of those exchange between people. So from that perspective, anybody can acquire the token through several means, and then anybody with the token can participate in the DAO governance portion. As long as you have tokens, you can participate in the DAO governance portion. The KYC staking component is more of a forward-looking compliance mandate that we thought would be in the best interest of the DAO, in the event that anybody ever came back and said, who did you pay out to and who took the loan? There's no issues. We've got all the data.
Gotcha. Okay. Thanks.
Yep, absolutely.
Well, thank you so much. Well, we're at the top of the hour, so I can't believe this hour has gone by so quickly. But I want to thank Charles and Wayne and Lance and Vida and Coinman and H Bar Bull and Deborah and Jim Nasser, everybody coming.
Anniversary Twitter Spaces.
Twitter Spaces. And John, thank you so much for coming too. And I wonder if you have any parting words before we end our spaces to the community.
I think you guys are in the right place. Your heads are in the right place, sticking with Hedera. I don't want to call a winner in the race. I think that Hedera has tremendous capacity and capability, and I'm glad to find such a healthy and welcoming community that we can pair with our community and just bring more strength overall to our mutual communities as we continue to identify and build the future together. And so, identify or think of or would like feedback on, my DMs are open. You can certainly join our BankSocial Telegram, and we'd love to have all of you there. It's really more of just a discussion area with smart people that love crypto, and people that love being part of the unbanked and serving the underbanked and unbanked communities. And so we're here. We'd love to join up with you guys. And thank you very much for having me specifically on today to talk with you.
Well, just from the short interactions I've had this week with the BankSocial community, I'm sure that we have a lot in common with the Hedera community. And I encourage everybody to follow each other and get to know each other. But and thank you so much, John. Before we end the space, I'd just like to say my heartfelt thanks to the entire Hedera community. It's 1 year ago today that I started Hello Future Buzz, and from 0 to almost 5,000 organic community members. I want to thank each and every one of you. And we'll do this again in year 2. And who the heck knows what's going to happen in this year? So I really want to thank everybody, and Lance and Tom Screen and Zenobia and Hausker and Lehman and Batty Hattie and Justin and Pillow and H Bar to the Moon, and too many to say. Coin Man, thank you so much for everything you do. I just never expected to be in this spot a year later. It was really funny. On the first spaces, there was like 3 people that came. So if you have an idea, just know that you should do it. And everything comes from an idea, and just dare to begin and start it today. That's what the hackathon is all about. And that's what Hedera is all about. We're all pioneers here. And I just love you all. So thank you for coming. So we'll end the space as we always do with Hello Future. Thanks everybody for coming. Ending this space.